Welcome traders to our midweek technical analysis video. So jumping straight into things here from where the market opened up, which is this candlestick right here. As you can see, we had the same sort of open as last week, where we was testing, sort of closed on a point of interest. We saw this level and determined this level with our fixed range volume profile. We established that there was a lot of volume inside this area. So we then saw price push out of this area upon market open. As you can see, we had an enormous bullish candlestick, and then we pushed up to go and test this higher, which we did actually speak about. In our post-week market review. We spoke about this recent all-time high being tested, and as you can see, we did test it on the lower time frames. Price came up to it a few times and tested it and dropped back down as a resistance. However, as the Asian session kicked in and then we got to the early hours of the London session, you can see that volume started to pick up and price just sort of pushed up and above this level, as you can see. And then as we went on, we sort of had low volume for that first Monday London session. I feel like that was a lot of fear within the markets as gold was at a new all-time high. People don't know whether to long or short. It is a very, very confusing time to trade, especially when a market is trading at all-time highs, a place that the market has never been before. I like to call it no man's land, as you will probably know. But yeah, as you can see, so price just kept on continuing on bullish, and then we created this high here at 4,180, and that was sort of the build up to the London session. Then as London session kicked in, we then saw some sort of bullish momentum. We saw that throughout the day all the way up until the start of the New York session, which is this candlestick here, and then price began to rise again, creating a new all-time high and the most recent all-time high of 4,218. And then since there, throughout the Asian session and the start of the London session today throughout to the New York, we have sort of seen low time frame bearish momentum, sort of creating a bearish flag at this all-time high. So the first thing that I'll say is, as you can see, we don't have any points of interest or any real levels to sort of look at. So what I will do is I will measure the entirety of this move after this most recent all-time high prior to this level here. So I'll measure the volume within the market, and we can establish our first sort of supply and demand area, an area which we can establish that price is testing and trading at in high amounts of volume. So there's a lot of traders in and around this area. The reason why I'm making it this thick is because you can see that the volume indicator is showing us that most of the volume was within these sort of these two bars here. You can see a lot of buyers and a lot of sellers in comparison to the rest of the day. So what we do is we mark in that level. What we like to do as well is we like to unextend that to the right and then just sort of mark in, so we can just focus on this level here. And what we'll do is we'll mark it in a green color. So that's our first sort of level established, and that's going to be our sort of supply and demand area. So we're actually trading within that now, and what we can understand from that fixed range volume profile is that a lot of buyers and sellers are entering or exiting positions in and around this level here, and it's very much even. So within this area here, price will consolidate until price makes its move, and that move will be a big push away from it, either to the upside or to the downside. So as you know, we measured the entirety of this move. Now let's go ahead and measure the entirety of the week so far. So we'll go ahead and do this here. So again, as you can see, most of the volume or the most volume was in and around this level here. So we'll go ahead and mark that level in. But one thing I will say is price, as you can see throughout the day, obviously we've marked in this level here, which is indicated by this bar here. However, we do have a lot of volume in and around here. So now we're going to sort of find out when that volume was injected into the market. So to do that, we're just going to measure again from the start of the week before price started pushing up. So we have another smaller level there. That's not the level that we're looking for. We'll drag it all the way up until that bearish move there. Okay, so that's going to be the volume that we're talking about that we just saw in that overall. If I go ahead and do that again, sorry, drag it from the start of the week to the end of the week. Okay, so yeah, that's going to be that level there, that smaller level. So We can find that now. We found that, and as you can see, these two bars are more or less the same. So we're going to go ahead and do the same thing as we've done for the first sort of area. And now we have sort of established 3 points of supply and demand that we can now understand there is an amount of a good amount of volume within the markets. Of course, you could sit here all day measuring each move and then find out the volume, but obviously we are marking up our hour one, so we want to see our main time frame, our main supply and demand areas, or main points of interest that we know where there's a lot of buyers and sellers in the market. Another area that I would want to look at is obviously this candlestick here up until the most recent all-time high. So if we mark that in there, okay, cool, that's just sort of solidifying to us that these levels are good. And then, as you know, we like to mark it in our common areas of support and resistance. So if we are missing one, for example, there's a level here that I'd like to look at or take into account. We'll make that in our normal purple, and we will extend that right as we normally do. So we'll also go ahead and grab a horizontal ray and just sort of mark in that new all-time high. So now we have established these levels. We have our points of interest and places that we want to look into the market, and sort of position or assume where we could expect the market to go. If you bear with me real quick, I will just make this visible on our minute 15 time frame. So bear with me 1 second. Just so we can go down to our minute 15. The supply and demand areas are mainly focused on our hour one. However, we are going to look at our minute 15, just sort of see how they are, how it looks on the lower time frame. So here we go. Here's our points of interest that we marked in our supply and demand sort of areas. So as you can see, we are in this supply and demand area. We've established that most volumes within the market, and just from price action, you can see that that is the case. If I go even down to minute 5, you can see that this area is consolidation. We can see that there's a lot of buyers, a lot of sellers, a lot of buyers, a lot of sellers. We can just see that people are buying and selling. You can see that with the volume of each candle, and you can see that with sort of this fluctuation that you can see. So price is, when I say fluctuation, I mean stuff like this. Like price is just sort of moving like this, and this indicates to us that in between this level, there's people that want the market to go up, so they're entering their long positions probably around this area here, and then there's a lot of people that want the market to go down, and they're entering in their positions around here. So with that being said, let's go back to our minute 15 and have a close look. So there's a couple of scenarios that could take place in and around this level. The first sort of position, sort of move that we could potentially see take place is going to be obviously a push up and away from this level and a break of that most recent all-time high at 4,218. If we see that level surpassed, then we're just sort of looking for the next ceiling, which could be around 4,250. That's if the buyers take control of the market inside of this demand area. However, if price does push below sort of this level, so the point of interest that we're going to be looking for price to continue in a bullish fashion is going to be that most recent all-time high. Obviously, if we see a change of character in and around this area, and then we see a break of structure above this level, we're going to assume that the market is going to continue and create new all-time highs. However, if we see sort of the sellers start to take control, and we see the level of this level that we marked in here, which is one of our own points of interest based on support and resistance. If we see this level broken through, and the last sort of foundation will be this area of liquidity here. So obviously we have resting liquidity below this level here. So if we see that swept, we most likely will drive ourselves all the way down to this level here, and then maybe reject off of. If I go back to our hour one, just to give a bit of a longer term bias. So this is sort of the moves that I spoke about on the minute 15. This is what they would look like. However, these levels are going to be sort of our foundation. So if we do see price surpass that low resting liquidity there at around 4,163 and then end up breaking through this level, we're going to then anticipate this level to be hit. And then if that level fails as a support, we're going to be looking at this level to be hit, so on and so forth. That's basically our strategy as to how we look at the markets. And then obviously for the upside, the only level that we have that we can actually have a look at is our new all-time high of 4,218. For sort of intraday trading, I'll give you a little bit of source. For intraday trading, you can obviously mark up your charts the same way as I do on the higher time frames. I say intraday trading, sort of intraday slash scalp. So like what you could do here is, like, for example, you could draw a trend line, capturing sort of these levels here. You could establish your like common area of support here. You could establish your common area of common area of resistance here, and just sort of trade this, so this like fluctuation. So you could sort of enter a buy, and once you've established this support and resistance, so scrap all of this, let's start from after we've established this resistance and established this support. So you could just sort of be taking long positions up to this point of interest, and then short positions down to this point of interest until you see a clean break of one of these points of interest. So that's sort of like low time frame trading. And then obviously you have this trend line marked in on the minute 5 candlesticks. It'll be a sort of another confirmation. If you are in a long, you see price pushing, you see a breaker structure of this level, and then a breaker structure of this high here. You're going to expect price to continue and push to the all-time high. And then obviously higher time frame will give you a little bit more information and tell you that this is a supply and demand area. Bear with me. This is a supply and demand area here, and then if that's broken through, that means buyers have taken control of that high point of volume, and buyers push price up. So just a little bit of source view there, but yeah, so overall for this midweek technical analysis, our overall bias is of course going to be bullish. If I go ahead and zoom out, you can see the amount of I'll go to our weekly just to really show you. I mean, gold has always been bullish really, but as of recently, obviously it's sort of from this low here that we created on the 31st of October 2022, and then price has just been pushing up there. But as you can see, once price does sort of have this big rally, like for example we're here, eventually you do see a year, maybe even a lot of months, or maybe up to a year of sort of consolidation with price moving sideways. If I go back to our daily, you can see the same sort of thing happens here. You have that rally, and then you see price consolidate. You have that rally, and you start to see price consolidate, and you can see that mostly through the chart. You see that rally, you see the new all-time high, and then price consolidates. So again, another example, new all-time high, price consolidates, and then you sort of have a bearish market for a little bit. And if you remember, let's go to our hour one again, and have a look at the dollar index. So as you know, and if you are paying attention, so the dollar index, if I go to our daily, as you can see, just based off of current price action, like if I was to go and mark in a couple levels, obviously this is more economic. There's going to be a lot of stuff that you want to take into account in comparison, like in comparison to like a forex pair or gold or something like that. But you can see, so I'm sort of marking these levels of support and resistance. So you can see that like we are at this area. Like if I go ahead and just sort of do what we do for gold, I don't know why I'm basically doing a course video, but hey ho, if this wants to work, does this want to work? No. Perhaps you're not allowed to see volume, or maybe I'm covering too much of a yeah, maybe let's go to our hour 4. Let's see if this works. Let's just sort of measure this move. Okay, I'm trying to show you the volume, but it's not working. But I will say this: you can see that the dollar index has propped itself up for an enormous push. You can see that by sort of we're finding this sort of like we saw this enormous drop from here. We've seen this drop, and then we've started to see price sort of curve out and start finding sort of a support and starting to see buyers entering the market. So like for example, if I sort of show you what I mean, so that's the sort of move that the dollar index is starting to prop itself up for, and the stronger the dollar, the weaker gold is. So it's like a fear aspect within the markets. That's the wrong chart. I'm not sure why that's even marked up, but that's the wrong chart. But yeah, no. So there's fear within the markets around the dollar. So basically, what people do is when they see the dollar is weakening and they see the US economy is unstable, people resort to gold, as gold is the one of the most valuable materials in the world. So it's sort of like a fear pair. People resort to this when the dollar is down. However, when they see the economy start to boom, and they see the dollar's strength rising, people start to short gold, and they start because they understand that these pairs correlate negatively, and then people see the price just sort of plummet. So going back to our midweek technical analysis, our overall sort of bias is going to stay true. It's going to stay bullish. We are expecting this supply and demand area to be surpassed, and then obviously this most recent all-time high. Obviously, I'll touch up on everything that happens in our post-week market review. I know you all enjoyed that last week. I will make a rough, I'll make a rough ceiling. So from this all-time high to the next all-time high, which wasn't much of a difference, but we are talking, let me just measure this for you. We are talking, what's 180 to, let's just call it 220. So you're talking about a 400 pip move. So if we're going to see another 400 pip move at least, if we see this new all-time high or its most recent all-time high hit, then we're going to be looking somewhere around, I'd say somewhere around this level here, around 260. We'll go ahead and mark this in a little gold for you all. So that will be the ceiling that we're going to expect to see price surpass. So if we see price break this level, we're going to expect that level to be broken through, and then price pushes above. If we see this level broken, could test the support and then continue up, and we could also see this level of interest fail as a support, and then price continues to push further down, perhaps testing this support here. I'll go ahead and mark that in red just so you know it's the bearish possibility. Of course, anything else could happen. Could see some consolidation. We could see a major correction. We could see that bullish move that's propped itself on the dollar index take place, and price sort of drops itself all the way back down into the 3000s. But only time will tell. And of course, we'll tap back in on our post-week market review. So as always, I hope you've all enjoyed. Don't forget to like, comment, and subscribe. Peace.